Ondas Holdings Inc., Nasdaq ONDS, is currently trading at exactly $7.53 USD, experiencing a sharp intraday decline of roughly 4.68% or roughly $0.37 as the session pushes through the morning volatility here on Monday, December 1st, 2025. If you are watching the ticker tape, you are seeing a battleground, not just a red candle. The stock opened at $7.88, attempted a push to a high of $8.07, and has since been hammered down to a low of $7.47, creating a classic volatility squeeze that often precedes a major directional resolve. The immediate expectation from the retail gallery, especially those watching the charts on their Robinhood app or scanning social media, is that this morning's drop signals a fundamental breakdown. Perhaps a reaction to the recent $80 million acquisition of RoboTeam or fears of further dilution. The prevailing narrative suggests that a company which has rallied over 700% in the last year is simply due for a massive correction, and that the smart money is leaving the table. However, the reality of what is happening in the order books tells a drastically different story, one that separates the casual observer from the institutional analyst. While the price is red, the volume profile suggests absorption, not capitulation. We are seeing massive blocks of shares being scooped up at these lower levels, a behavior consistent with the aggressive accumulation we witnessed in Q3 from heavyweights like Jane Street and Renaissance Technologies. This is not an exit. It is a transfer of inventory from weak hands to strong institutional vaults, disguised as a sell-off. The expectation is panic. The reality is consolidation before the next potential leg up toward the analyst targets of $10 and $12. To understand why this price action is so deceptive, we have to look at the broader context of the last 12 months. ONDS has transformed from a penny stock trading under $1, often ignored by major investment wealth management firms, into a serious contender in the autonomous system space, boasting a market cap approaching $2.9 billion. When a stock runs this hot, moving from sub-$1 levels to nearly $12 at its peak, the pullbacks are vicious. Today's drop to the 750 range tests the resolve of every trader holding the bag from the highs. It creates a psychological barrier where fear overrides logic. If you are managing your own self-investing strategy or using Schwab Intelligent Portfolios, your algorithms might be flagging this as a momentum break. But if you look at the 50-day moving average, sitting right around $7.69, we are dancing on a razor's edge of support. A close below this level triggers stop losses, which is exactly what the market makers want to flush out the leverage before the next earnings catalyst. The volume today is already exceeding 16 million shares, tracking well ahead of the average daily volume of 32 million. This elevated activity indicates that the market is currently repricing the risk associated with the RoboTeam acquisition. On paper, spending $80 million looks like a cash drain, something that usually scares off conservative investors in Fidelity mutual funds or those managing cautious Fidelity IRAs. However, the integration of RoboTeam's tactical ground robotics with ONDS's existing aerial drone and automated data platforms creates a unified autonomous ecosystem that is rare in the mid-cap space. The market is struggling to value this synergy today, resulting in the discount you see on the screen. It is a classic case of short-term integration pain masking long-term revenue scaling. Let's talk about the specific mechanics of today's trading. If you are executing trades via interactive brokers trading platforms, you might have noticed the widening bid-ask spreads during the initial drop at 9:45 a.m. This wasn't just retail selling, it was a lack of liquidity provision as market makers stepped back to let the price find a true floor. The drop to $7.47 bounced precisely off a technical support zone established back in mid-November. This kind of precision is rarely accidental. It suggests that while the crowd is selling, the algorithms used by Fidelity Wealth Management and other institutional desks are programmed to buy the dip at these specific Fibonacci levels. Now pause for a second and look at your own position. If you are holding ONDS, are you looking at the red percentage and feeling the urge to sell, or are you looking at the volume and seeing the opportunity? Comment below how many shares of Ondas Holdings Inc. you currently hold and what your average entry price is. I want to see if the majority of you are sitting on profits from the $1 days or if you entered during this recent consolidation. This brings us to the core business, which is often misunderstood by those who simply view ONDS as a drone stock on their SoFi investing dashboard. ONDS is not just about flying hardware, it is about critical infrastructure data. They operate proprietary wireless data networks for mission-critical industries like railroads, utilities, and oil and gas. Think about the massive complexity of managing the money and logistics of the North American rail system. ONDS provides the secure, high-bandwidth wireless networks that allow these trains and track sensors to communicate. It is unsexy, industrial tech, but it is the backbone of automation. Their Iron Drone and American Robotics segments are the flashy side, autonomous drone-in-a-box solutions that inspect oil pipelines or secure borders. But the real moat is in their spectrum and their regulatory approvals. The recent news cycle has been dominated by their Q3 earnings, released on November 13, 2025. They reported a loss of 0.03 cents per share, which sounds negative until you realize the street expected a loss of 0.04 cents. They beat expectations by 25%. In the world of online investment and high-growth tech, an earnings beat of that magnitude, combined with a revenue surge of over 200% year-over-year, is the kind of fuel that powers multi-year rallies. The revenue is not just trickling in, it is compounding. The acquisition of RoboTeam adds another layer: tactical ground robots. This means Ondas now controls the air and the ground. For a defense contractor or a major logistics firm, buying a unified solution from Ondas is far more efficient than patching together systems from 3 different vendors. This is the value proposition that Fidelity brokerage analysts are likely crunching in their models right now. However, we must address the bearish case because blind optimism is the quickest way to destroy a portfolio, whether you're using SoFi Active Investing or a traditional broker. The company is still burning cash. The acquisition of RoboTeam, while strategic, consumes liquidity. Their free cash flow is negative, sitting at roughly negative $35 million. In an environment where interest rates are a constant pressure, unprofitable growth is penalized, which is why you see the stock down 4% today, despite the good news. The market is demanding proof that they can integrate these acquisitions without issuing massive amounts of new equity that would dilute existing shareholders. If you are using investment help services or reading reports from Fidelity ETFs managers, you will see this execution risk highlighted in bold red text. The concern is that Ondas might have to raise capital again in early 2026, and the market is trying to front-run that possibility by pushing the price down now. Yet there is a counter-argument to the dilution fear. The recent institutional activity is staggering. In the last quarter alone, Hood River Capital Management added over 8 million shares. Jane Street added 8.4 million. These are not gamblers. These are the most sophisticated investing sites and funds on the planet. They are looking at the same balance sheet you are, but they are coming to a different conclusion. They see the $8.2 million counter-drone order for a European airport as not just a one-off, but as the start of a trend. As geopolitical tensions rise, the demand for counter-UAS, unmanned aerial systems, is exploding. Ondas is positioning itself to be the shield for critical infrastructure. If they secure just 2 or 3 more contracts of that size in Q4, the cash burn concern evaporates and the stock likely reprices to the $12 range rapidly. We also need to consider the broader sector momentum. The Trump trade or the general industrial reshoring narrative plays directly into Ondas's hands. Rebuilding American infrastructure requires automation. You can't run a modern railway or a secure power grid without the kind of automated inspection and data transfer Ondas provides. It is unsexy industrial tech, but it is the backbone of automation. And if you're looking for investment ideas that are not overcrowded, this is where the asymmetry lies. You aren't fighting for scraps in the megacaps, you're taking a position in a mid-cap industrial play that is currently being mispriced by the market's obsession with short-term liquidity. Let's look at the technicals again, because the close today is critical. If ONDS closes below $7.50, we might see a flush dem to the $6.80 level, which would be a severe test of the long-term trend. However, if buyers step in, and the tape shows they are trying to, and we close above $7.65, it forms a hammer candle on the daily chart. For those of you who use Interactive Brokers trading tools with advanced charting, you know a hammer at support is a high-probability reversal signal. It indicates that the bears had their chance to kill the trend and failed. The divergence between the Robinhood stock trading crowd and the institutional flow is the key indicator here. Retail is selling the headline, institutions are buying the trend. The sheer volume of shares changing hands suggests we are nearing a climax of this consolidation phase. The 52-week high is $11.70.